The FHA 3.5% down loan is an incredible product for first-time homebuyers. And with its amazing 3.5% down, it's very hard not to use this product. But what if I told you there was a way to use this FHA 3.5% down loan to lower your monthly mortgage, create a form of passive income, and invest in real estate? Well, that's what this video is today, and I'm going to tell you exactly how I did it using the same exact strategy. What's up, everybody? Welcome back to my channel. My name is Evan Phoenix, and my channel is all about real estate investing and education. So if that's something that you're interested in, why don't you go ahead and subscribe to this channel. For those of you that do not know, FHA stands for the Federal Housing Administration. FHA is a mortgage that is insured by the government and issued by a bank or other lender that is approved by the agency. The benefits of a government-backed loan is that they are easier to qualify for, require less money down, they're more lenient on your credit score, and they help build you credit for other credit-related purchases. But with these government-backed loans, there's typically a limit in which they will allow you to borrow, so make sure you talk to an FHA-approved lender so you can understand fully what that is and if it will work in your area. Now, I said earlier in this video that it's hard not to use this loan product because of its 3.5% down. So let me give you examples to really hammer it down how the importance of this low down payment can help you out a ton. Let's say there are two borrowers for a $200,000 home. Buyer 1 is purchasing with a FHA 3.5% down loan, and buyer 2 is purchasing with a traditional conventional loan, which typically a traditional loan is going to require 20% down. Buyer 1 will pay $7,000 in down payments because that's 3.5% of $200,000. Now buyer 2 will be paying 20% down, which is $40,000. Now you can see that $7,000 and $40,000 of having to put down on a property are completely different, and being able to put that $7,000 down is more attractive. Now, I do want to say before moving forward that your monthly mortgage payment will be higher because of that $7,000, but we'll get into that. So now you know that the FHA 3.5% down loan is a great loan product, and it allows you to put a little bit of money down to actually get into a property that's probably going to be the same amount monthly mortgage as rent in your area. So with that being said, you're probably thinking, hey, let's go ahead and go out there and buy a single family house and live in it and buy our dream house, and we'll live comfortable and be just fine. Wrong. Don't do that at all. I'm about to tell you exactly what to do with this loan product. So let's get into the best way to utilize this FHA 3.5% down loan product. But first, I'll give you a hint. You probably guessed it. It's house hacking. So house hacking can be done either in a single family or a multi-family 2 to 4 unit residential building. In a single family house, you'll purchase it, live in one of the rooms, and rent out the other rooms in the house, and you'll be able to apply that income that you're getting from the other rooms to put towards your monthly mortgage. Typically, this is going to lower it drastically or even eliminate your mortgage altogether, putting more money back in your pocket. The same goes with a multifamily property. If you buy a 2 to 4 unit residential property and you live in one of the units and rent out the other 1, 2, or 3 units, then you can use the income gathered from those units and put towards your monthly mortgage while living in the property, lowering your monthly mortgage payment and even eliminating it. Not only will house hacking save you money, but it will give you all the benefits of home ownership, which are absolutely amazing. You'll get the appreciation on the property as time goes on and more houses sell in the neighborhood like kind of yours, and for higher price, it will just drive up the price. You'll be able to depreciate on your taxes every single year of that property, and you're actually having the tenants pay down your mortgage for you. So after you put the initial money down for the property, the tenants are taking care of the rest. It is a great benefit, and it's a lot better than renting in your area. And it is the single best way I believe that you should start off buying a home. For those of you that do not know, the mortgage is typically the biggest expense that someone has every single month. So to eliminate that or even drop it drastically is going to be a huge help in people saving up, whether you have to pay off student loans, whether you want to save up and invest it in something else, whatever you want to do with the money, it's more money in your pocket at the end of the day. Now, the smart way that people utilize this strategy is actually purchasing a house hack, living in one unit or one room, renting out the others, gaining that income every single month, living there for a year, because when you do an FHA loan, you have to live in it as a primary residence for 1 year. Except when you refinance out after 6 months into a conventional loan, at which point you can move out and get another FHA loan. But with that being said, living there for a year and then moving out, renting the unit that you were living in, that way you have more income generated from that property, eliminating all the expenses on the property, and then going and buying another property with an FHA 3.5% down loan. So now you own a property that you're renting out fully now, and you're in a brand new property that you're house hacking and living in for another year. After that year's done, do the same thing, refinance out into a conventional loan, go out and buy another one. I believe when it comes to these loans, you're limited at about 10, but let's say you do this for 5 years, and at the 6th year, you now have 5 properties that you are renting out, gaining cash flow from, and it's completely paying for itself, and even paying for your 6th house, which could be your dream home that you want to go and live in. You now have 5 rental properties. And the best thing of all, you only put 3.5% down on each of them when you went to buy them. Now, if you're listening to this and you're thinking, you know what, I really don't want to live with other people. I don't want to have that inconvenience of living right next to someone wall to wall and having people in my primary home. Well, 99% of people will probably agree with you, but there's this quote that I absolutely love from Jerry Rice, and it kind of goes like this. It goes, do what others won't now so you can live how others can't later. To tie this into this quote, like I said, if you were to buy 5 of these house hacks over the span of 5 years, the cash flow that's generated from these properties and the appreciation that you get will probably pay for the 6th house, which is your dream home. So if you can sacrifice 5 years to building this rental portfolio using the FHA loans, then you could potentially have a free house at the end of it. It's your dream house, and all that sacrifice would have went towards paying for a brand new house for you. Okay, so let's say you see this video, you want to get into house hacking. What's the first step that you should do? That's go out and talk to a lender. A lender is going to be able to pre-approve you, give you a pre-qualification letter that allows you to go out and start making offers. As of right now, the requirements for an FHA loan are a credit score of at least 580, a debt to income less than 43%, must be a primary residence, steady employment, and must apply mortgage insurance. If this video interests you at all in learning more about house hacking, you're definitely going to want to go and check out this video that I made all about my first house hack and how I was actually able to live there and get paid $800 every single month. The income from the other units actually paid me each month to live in my house. And if I can do it, anyone can do it. So make sure you go and check out this video.